Hey guys, just want to do a quick update on, I guess, just some things I've been watching. There's some guys I've been watching on YouTube. There's several of them that I've been watching, and I totally appreciate all their work. They put a lot of time and effort, and I think they've identified some really key things about the AMC stock, but also about how the algorithms are trading, whether they base it off of Wyckoff or they base it off of actually mirroring and finding the algorithms that repeat. And it's actually pretty easy to find the algorithms that repeat. I'm just using TradingView here. Basically you have a big macro that you'll find on the big picture, and that will repeat every 6 to 9 months. And then they will break it down, and it will repeat every 5 days. It will reset in another 5 days. It will reset, and it's like a block of five, block of five, block of five, block of five, switch. And then they'll do another block of 5 days, and then they can add in a random. It's like a two-part random tail to the end of that. And the reason I'm telling you that is I don't want you to get your expectations up on these algorithms, even though they're it's I'll show you in a minute. They just mirrored them. They literally just mirrored them the same way that they did back in January, that they did in May when the stock ran up. They just mirrored it. And it was just how the computer was running it. And the reason part of it works that way is I want to show you the exchange for AMC. And this is off of NASDAQ.com, but it's the New York Stock Exchange is the one that actually holds the ticker symbol AMC. They are in charge of, and their market makers, it's Pillar, I believe now is what they upgraded to for their network. How they exchange flow of exchange data is, I believe it's called Pillar. Um, but I want to tell you, so the New York Stock Exchange, and this is off of NYSE.com markets slash NYSE slash membership. There is a okay, here it is. So I want to tell you about designated market makers. So the NYSE has 3 designated market makers that are market makers for the NYSE. I don't want to repeat myself, but and these are the market makers for the NYSE. You can call in, you can get a trading floor broker as well, and then you have SLPs. They offer extra liquidity, and then they have supplemental liquidity SLMM firms, which are more or less the same people. And the reason why I believe that you see these exact same patterns and fractals repeat so just done. I mean, if you really get in here and look at it and get the scale right, you'll see that it just repeats over and over again. And that's why I'm going to call this the AMC the Algo Black Hole, because it just goes on forever. And that's why a lot of people believe that this fractal will just continue up to a higher one and a higher one, and it will just continue on. And that's just part of it is there's a finite number of market makers that create the market that AMC trades through. So regardless of all of the other randomness that could happen in the market, if somebody wants to take a position, most of that's going to happen in a dark pool. You want to take a big position in a company, and it's also based around anonymity, which is another reason why they'll use a dark pool or an unlit exchange, so they can buy and sell from each other based on the prices that they want to sell at, and there's no bid or ask reported to the National Best Bid and Offer server. So, and that by nature, those dark pools do not have a price listed on them, and people will generally they'll cover their shorts in there. I think the way that you see this volume and this chart is because there's that small number of market makers for AMC. And that's why this just repeats. It's just on autopilot. Blip. Now, I will tell you that it's very interesting because it looks like we're actually in the last stages of the macro fractal, and I'm giving you a hint of warning because a lot of people have been saying we're in the last stages, and they're probably right. But I want you to, I have an IT background. I've been doing it about 15 years, and it is extremely easy to change the algorithm. If they want to add noise, or they want to extend or shorten how the algos run, they can do that. Um, and there's a number of easy ways to do it. You just slow down the timeline, or maybe you change up how you receive some of the volume. Um, I mean, as market makers, they can see all of your trades coming in. As soon as you initiate it, they can react to it prior to it coming in. Like, it comes in at such a slow pace to them that they can then adjust their position short or long based on the volume coming in. And it's not that random. Um, they already have all this mapped out. Any of the data, like, I'm gonna zoom this chart out quite a bit. All of the trading data, all of this, like all these hundreds of algorithms that are trading along with these computers that are feeding into those three different market makers that are listed, all of those market makers have that flow mapped out. They have it computerized. So they know ahead of time who's going to do what, which computer algorithm's coming in. So if they are short and they got a computer algorithm that's coming in long, they can manage that, or they can short in against it. There's not really any surprises here anymore. There's just it's kind of like you kind of just rolled the ball down the street, and it's the same street, but it just goes in a circle. So I did want to show you these areas that I highlighted. Let's start back in here. I mean, this is just amazing. Literally, this area that I highlighted over here, this is, and I'm sorry if you can't see this, you're on a mobile device or something, but you have a smaller fractal here. It repeats here, up here in April 20th. You have a fractal here in January 20th of 21 that repeats identically almost to May 18th and 19th. The other fractal was December 7th of 2020, and then the repeating fractal of that was April 16th. Now, you can actually find those fractals repeat in a very small time frame, usually 5 days. Excuse me. And they repeated a lot, but in here, so there's a very small one that actually repeats here on 15th. It starts the 14th of July and really ends around the 19th of July. 5 days. It completed in that 5 days the entirety of what it did from July 20th to August 11th. And then it just wraps around again. Some of this is, you see these big green candles here. It starts getting green right in here. It's so easy to computerize how you write options, how you short a stock, how you go long on a stock, because you already know what it's going to run. So you see all these big green volume candles coming in here at the bottom of the stock. Well, that's where they're going to go long, and then they rip the stock back up, and then they're going to short it again, and they're going to write naked calls up here at the top, and they're going to sell puts down here at the bottom, and meanwhile the stock stays very range bound, so all the calls that you wrote expire out of the money except for a very small portion, and then you gear up to get it out of that range again, but you can probably just delay because it's going to come back into the range. And this is, if you're a computer and you're somebody that has already computerized all this, You can literally just sit back and eat popcorn and drink coffee all day and just let it run. Um, at that point, being a market maker it's very automated, and that's why it's like 90 something percent of all the volume that you see here is computerized trading. So these guys, in that sense, aren't sweating as far as they know what's coming, but the other problem is they know what's coming, and the computer is probably added a little bit of noise in here and at the latter part of December, but it's extremely close to this bigger algorithm. Here's the micro algorithm that completed in another 5-day segment. Yep, another 5-day segment. This one, I believe I copied it out of here. I did, because I found it. Yeah, and here's that big push down. So here's, I'll call this the hanging man, and here's the big push down. Well, yep, there it is, hanging man push down. Guess where we're at? The hanging man right in here, and this big push down. Well, what comes after that? They just added a bunch of crap. This is on purpose. Okay, this is to keep the stock range bound for whatever reason. And don't forget, the options chain for January is already stacked. It's very heavily stacked, especially over $30. They're not going to be doing good over $30. If they push this stock down again, and I'll end on this note, if they were to push the stock back down here, we'll just say 20 bucks. Okay? And then it makes some kind of a spring move or something back up, and then does a little reset or something. Okay? This is just this is not to give you an idea like, oh, what's going to happen this week. That's not the point of this. If they push it back down here, all those options, see a lot of like all the weekly options, you won't see a lot of the in the money options have heavy volume on them. If they go out of the money, they will get heavier volume. Retail will pick those up. Other entities will pick up those options. They might buy them 2, 3 a month, 2 months out, but they might only buy them, say we put it down here at $20 again. Well, all the 25 strikes and the 22 strikes are now going to have heavy volume on them because they're cheap and they're out of the money. So you're essentially building a spring here in the options chain, and it gets really violent when you still have heavy unbalanced volume, you still have heavy demand for the stock. The unbalanced volume is still really good. It's not like the demand has changed for the stock. It's still there. But then you start getting all those options that didn't have a lot of volume. They're going to start getting them. So now the 22s, the 23s, the 25s, and the 30s, and all that are going to get really cheap, and the volume on them is going to get insane. Well, if you're a market maker, that means you got to go out of the open market. You got to start hedging fast, because the volume, the option chain is going to get loaded. And you've already driven down the stock as much, and you're looking to cover because you're at the bottom part of the algo, which right in here is where they switched. If you look at any of the other macros, this is the change right here at this push down. Right here at this push down, they switch. Okay? And guess where that green heavy volume is? Right here. They're already looking to switch. So any of the guys that are bag holding, if this does repeat, and if they add noise, and that's the thing. I want you guys to not get disappointed if they add noise and play games, because they can. But if it does repeat, and they did look, we've got some pretty heavy volume in here prior to them covering, even pushing down, we got some green volume. And some really big candles up in here, especially in this area right in here. Yeah, this is just, they're just playing games. They all know that they're wanting to switch. and a lot of the algorithms are like, hey, we're gonna switch in here, and we're gonna cover, we're gonna, maybe they're not. Some of them, yeah, they're covering, but they're gonna switch from short to long, and that's what a lot of this is. The algorithms are buying in this area because they're gonna load up and then reverse. I hope this wasn't too scatterbrained, but if they push the stock down more, it just loads the option chain more with more calls. Um, and of course, that's still my opinion that it was a series of gamma squeezes that led to the short squeeze in January, and that's just the way the algorithm ran. I mean, you can see in here, it's just the same thing. I mean, it's amazing. Look at this. I mean, it's, you couldn't get any more exact. It's just, in this whole peak here. Oh, and here's the micro. Here's the micro of it where it does the same thing here that it does here in the macro. It's just, this whole thing is, they've already, to me, they've already known exactly when this thing was going to squeeze, if it does. They already know all the dates. They knew back in January, they were like, all right, that's it. I mean, they probably already packed their bags because they knew May was coming, because it was just going to repeat. And then they knew, here, in this time frame, whatever's coming next, they already have a pretty good idea of what it is, because they write the program. Either way, guys, I hope you find this informative, helpful. If you guys have any questions about any of the links that I posted, any of my thoughts on that, just hit me a comment down below. I appreciate all the guys putting out a ton of hard work on mirroring, figuring out these algorithms. It's very helpful. I just look at it as good data. I'm not trying to make any projections or say when things are going to happen. And you know what? I probably ought to get rid of these bars, because some people are going to, create dates and stuff, because I've been watching this for a while, and I've been trading for several years, and the biggest thing that can really mess up your trading career is disappointment. And this is, to me, this is aimed at disappointment. This is to get you frustrated, disappointed, irritated, get you go off, just mentally frustrate you. And I'll tell you right now that I already know the game. It's just a game. That's all it is. And if you're willing to stick with it, just like with any stocks, the guys that hold for extended periods of time, years and years, they tend to do better. They tend to beat the market. But that's just my opinion. Either way, guys, none of this is financial advice. I'm not a financial advisor. If you find this content useful, just give me a thumbs up and a comment down below. Thanks again.